All right, so let's begin the show and let's talk about investment in gold and let's discuss the further trajectory of the precious metal. Going ahead, how much space should it take in your investment portfolio? I'm joined by Jai Prakash Gupta, founder of Dhan. I also have Kunal Shah, head of commodities research, and Nirmal Bang. Good evening and welcome to the show. And as we can see, Bitcoin rallying, getting the benefit from the US mandate. Jay, what about the precious metal gold? Can we see it shining further, or do you think this is what it was and that's the peak that we've seen as far as gold movement or prices are concerned?
Yeah, hi Kavita. Thanks for having me on your show. We have seen some kind of correction coming in precious metals post U.S. elections, where Trump has been re-elected as a president in U.S. I think the primary reasons could be the market feels that okay, Trump would be able to bring that kind of strength in the U.S. economy. The fear of the debt crisis seemed to be allaying a bit. That caused kind of fall which we saw in the precious metal prices, which is on the other side, equity market rallied during that last week or so. But I don't think the glitter has gone as of now, because this could be a short-term, reaction. But I think the kind of concerns the global market has, uh, be it in US in terms of the kind of debt on which they are sitting on. Apart from that, the crisis in the Middle East has not been resolved. The US, the Russia-Ukraine war is still is yet to see the light of the day, where there is an anticipation that there could be a ceasefire. But I think there are a lot of headwinds across the globe now, and that would ultimately benefit bullions. So I think we can't say that the glitter has gone. I think gold should be a part of your portfolio, because this gives a balancing and anchoring effect. I think we could see the rise of gold maybe in FY25. I am not writing it off as of now.
All right, so you are now writing off the glitter in gold. And Kunal, do you concur with Jay? What do you have to say? And also in terms of levels, what are you seeing? Kunal. Kunal, can you hear me?
Yeah, hi. Am I audible?
Yes, yes, you are now.
Yeah. So I missed out on a question due to
Sure.
connectivity
So I
issue
was
with
asking
Kavita.
you, do you concur with Jay? And it's not all according to Jay for gold. What in terms of levels are you looking at as far as gold shine is concerned?
So the outlook of gold is very bullish going forward. In next 1.5, 2 years, we are going to see unimaginable levels as far as gold is concerned. The problem is that the entire gold trade has shifted to east. The Western central banks, Western investors are either buying Bitcoin or not buying gold, or they have been a seller of gold. Now the tides have turn toward the entire east, where Russia, India, China, South Africa, even in Latin America, and if you look at Brazil, Argentina, each and every country on our planet is diversifying away from dollar, and they are buying gold. So the outlook of gold is very bullish going forward, irrespective of the volatility which is pertaining because of the Trump's election, or whatever Trump may say in future also. But the fundamental of the US dollar is that eventually dollar should weaken against the basket of currencies. The strength post US Trump joining in the month of January is likely to be short lived. And forget about the dollar. It's not a dollar trade. Last year, dollar index strengthened. At that time, also gold prices rose. Bond yields rose. At that time, also gold prices rose. Currently, also with the rising strong dollar, with the rise, so all the traditional equation determining the outlook of gold are not working. The In this kind of era, in this kind of time, where there is a heightened geopolitical risk, heightened amount of debt across Western economies, and at the same time, uh, after US sanctioning Russia, no country wants to have dollar on their foreign exchange reserve, diversifying their foreign exchange reserve. So this is a rare scenario where from the investment community also the buying is coming. Right now I'm in middle of the Mina Bazaar at Dubai. I see even at this rate people are buying gold. There are queues in certain shops for buying gold. There is rush. So the jewelry demand also in Asia is very strong. Ex China right now. China also may follow up. And if you look what is happening in across the asset class, the only clarity where there is a fundamental bullish trend is gold. So gold is heading towards $3,000 next year, 3,200 to $3,300 in 2026, 2025, $3,100. And all these targets, what I'm giving you, are on the conservative basis. So considering rupee remains at the current level, on Indian bourses, we are likely to see gold somewhere at 83 to 85,000 rupees in next 1 year. And in next 2 years, gold will be somewhere between 91 to 92,000 rupees, considering there is no change in the import duty. So very bullish outlook on gold. And even at this rate, I am comfortable to recommend that you should still own gold, still buy gold, and hold it.
But then, Jay, after hearing what Kunal explained, just a scenario. Now, if the demand is driven by the East, and if at all we see all the geopolitical tensions also getting controlled since Trump gets into the office, maybe by early next year. How would we maintain the demand for gold if it's just on East, and if we can see the way Bitcoin is rallying up, and we'll also see we can also expect the same kind of rally in equities also. Do you think the trajectory or the gold trajectory that we're talking about now can be short-lived or temporary, considering all these triggers?
Kavita, see, we need to understand that market runs in cycles, right? So we have seen unilateral rally uh, in say last four years almost, where every asset class has given good returns, including gold and silver. I think going forward, you also need to understand that there is a very high probability that crypto could be also one of the asset classes which were till today had a lot of clouds hovering around it. But with Mr. Trump coming in, it looks like the crypto market is also likely to see some kind of traction coming in. But we also need to understand that for any investor to keep his portfolio stable, you require to have exposure to all asset classes. I think till now the options were equities versus gold and real estate and fixed income. Now you would have one more element to it, which will be cryptos. Okay, so but ultimately, to keep your portfolio stable, you need to have gold as an asset class with you, right? The proportion can vary, but I think at this juncture, when you will find that some kind of short-term correction can set in bullion, I think that would be a time to revisit and understand whether you need to reduce your exposure to gold or you need to add further. But I feel that. If there is any correction setting in, it should be a good way or a wise decision to keep gold along in your portfolio along with cryptos if you want to have some kind of portfolio which is on a high risk side. But given the fact that any kind of investor you are in, whether you are a conservative investor or you are an aggressive investor, I think gold, as I said earlier, also gives you that anchoring effect, and that should be part of your portfolio. And I don't think that somebody should just sell gold and move to equities or move to fixed income. That would be a wrong strategy as for me on that point.
Right. Right. So maybe diversifying it in the right way can be the key towards your portfolio planning. But then one last question to you, Kunal, and then we'll wrap up this discussion. What about silver and also base metals?
Yeah, you saw the allegations today on the India's Adani Group, and what makes you realize that what is this all about? Solar panels. That is at the center stage. You see the COP2 conference, which was conducted a week back. The global environment, the global climate is facing severe threats right now, and one of the major breakaway kind of scenario is the use of solar. Okay, the solar panels. The demand of solar panels is going to grow at an exponential rate. The silver supplies are not going to be enough to match it up with that kind of growth rate going forward. Silver markets, the supply side have continued to remain weak. We have not seen incremental growth in the silver supply since the more than 50% of the silver comes from the secondary mine production, that is of the lead and zinc. So, in a market which is not able to come up with new supplies, the demand is rising, and the market is in a deficit of more than 10% every year from last 3 years. So it is going to go up to 1,15,000 to 1,20,000 on Indian bourses. On COMEX, the first target should be 36, $37, and then eventually $40. So I remain pretty upbeat on the outlook of silver also. And I believe that any dip, any decline is a great buying opportunity. It is must have in your portfolio right now. You should
Portfolio,
have
right?
gold and silver both.
Absolutely. That's the way to go as far as having these commodity asset classes in your portfolio. Thank you so much, Jay and Kunal, for being on the show and helping our viewers with their strategies in gold and silver today. Thank you so much. Time for a quick break, but then post that, let's get your mutual fund portfolio queries answered. And in case you want to send across your questions, we'll be flashing our WhatsApp number and email ID. Stay tuned.